Good morning, good afternoon, and good evening, folks. This is Naeem Aslam. If you can hear me, please say yes or no. Fantastic. And I apologize for a little bit of husky voice because I am under the weather and not feeling too great, unfortunately. So, as always, my name is Naeem Aslam. I work as a chief market analyst at AvaTrade. I come with a wealth of 15 years of trading experience. During this period, I have worked as a hedge fund trader for Bank of New York Mellon and as an equity trader for Bank of America. Today, it is an honor for me to host this webinar for you guys, and I'm glad that you guys are actively participating in these series of master classes that we hold on a weekly basis. So that's a little bit about myself, and now we will crack on the webinar because we do have quite a lot to cover. In addition to that, we also have a live trading event also coming in about 15 minutes time, approximately at 13:15 London time. We will get the US ADP data, and that number is going to move the markets quite a bit. But before, just a little bit of background about the markets, because since last night I have been up. Stayed up all night looking at the US elections, was very much glued to the screen, and taken several different trades since last night in terms of volatility, so cannot complain. But obviously, with the polling health and for staying up all night, there's a bit of a there's a lot of a weakness on my side. Nonetheless, let's continue, and then we will take things as they come along. So as always, the first things first, anything which will be discussed in this particular video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, folks, as always, if you have been trading equities, or whether you've been trading Forex or commodities, whenever you see that huge move to the upside or to the downside, there's always a fundamental news behind it. And there's nothing more important for you guys to get to know the news as quickly as possible. Of course, you can get all those news from tier one media, such as CNBC, Bloomberg, Reuters. But the best way to achieve those news, in my humble opinion, is Twitter. And speaking of a Twitter, because it gives you very concise and straight to the point information, and this is an opportunity for you guys to understand and then see where the market has moved and why the market has moved. So for me, in terms of a Twitter, my Twitter handle is right in front of you over here, which is Naeem Aslam 23 right over here. And for AvaTrade, of course, it is AvaTrade, and I will show you both of these on how to follow them and how to find them on Twitter. But before that, on a daily basis, we do produce two different sort of videos. I do live hits on our YouTube channel, which is AvaTrade, and then we discuss the fundamentals on each and for every single day, which are likely to move the markets up and down. In addition to that, for investors and traders who are a bit more sophisticated, who do have a bit of a knowledge about a technical analysis to an intermediate level, I do produce a technical analysis video as well, where we explain about the entry and the exit point with respect to the markets. Now, as you know, AvaTrade's unique technology is AvaTrade Protect. So this is quite a unique feature that we have, and I'm not going to spend too much time, but we'll just go through this because it is quite important for you guys to understand, and then of course to utilize it, because it can help you to buy insurance on your position. So Ava Protect is a revolutionary one-click risk management tool available on AvaTrade Web Trader and AvaTrade app. With AvaProtect, you can purchase protection against loss for a defined period after opening a position. If the protection ends and you have an open position that is losing, AvaTrade will reimburse the losing directly into your trading account. The only cost is the AvaProtect fees itself. So hopefully that explains itself what it really means. So now I'm going to show you how to find us on YouTube and of course on Twitter as well. So the channel which is right in front of you, this is our YouTube channel, and then you can see that on a daily basis we produce a lot of videos on and this is your YouTube live hit videos where you can really understand what exactly is going on with the market. In addition to that, you also have the technical analysis videos as well, so do have a look on it. But in terms of Twitter, in terms of you getting the information firsthand and then acquiring all that information, folks, I cannot stress enough to be on a Twitter, and then this is my Twitter channel, Twitter handle. So feel free to follow me, because when you do, you get all the information in relation to the markets. Like earlier, there was a news about John Lewis, which is cutting another 1,500 jobs, unfortunately, in the UK because of the pandemic. And throughout the night, as you can see, I've been sending out the news and the main stories, which have been really moving the market. So, if you were on any of the Twitter feeds, so you will see that what exactly means. And then in addition to that, we also produce these videos, which are there as well for you to understand. Similarly, when you follow AvaTrade's account, please make sure that you are following the one with the blue tick, because this gives you an authentication that you are following the right account. And once again, all the videos and the tweets are right over here as well in relation to the markets. Now, let's get back to the agenda and then see what exactly is on the agenda for us. So let me just bring that up. So in terms of our today's webinar, what we are going to discuss is we're going to discuss the importance of US non-farm payroll, what makes the US NFP reading, what instruments to trade, the current state of market and analysis, and then finally we will define levels and strategy. Now, as I was explaining to you guys earlier, so in order to find the data, so the US non-farm payroll data, obviously you can go to several different outlets. Forex Factory is something that you can also use. So every first Friday of every month, you get the US non-farm payroll data, and you will see that the data is going to be released at 13:30. So right over here, as you can see, 13:30 UK time, we will receive that particular data. And the forecast for this time is for the non-employment chain is 600,000 against the previous reading of 661. So again, the number is moving lower. Unemployment rate is also expected to drop to 7.6 from 7.9. Remember, this unemployment rate used to be well over 13% only a few months back. So that is quite a phenomenal improvement in terms of the employment chain. But before that, tomorrow we're also going to get the FOMC statement. So at 7 p.m. London time, so you will have the Federal Reserve making an announcement with respect to its federal monetary policy decision. But the first thing first, the most important number is going to be out in less than 6 minutes, and that is your ADP non-farm employment change. And the forecast is for 650,000 against the previous reading of 749. This particular number usually sets the tone for the US non-farm payroll, which is due on Friday right over here. So if this number, which is about to come in 5 minutes, comes in strong, then it usually means that the US NFP number is also going to come strong as well. Now, quickly, what we're going to do is we're going to look at the opportunities ahead of the data, because as the data will come, I will go through all of those numbers with you guys, and I will show you guys those numbers and the data. So the data will be very much coming right in front of your eyes over here. and then you will see that I will send that information straight to you guys in the markets as well. And now what we're going to do is we're going to look at gold price ahead of this data. So we're going to see that if there is an opportunity. So right now, what we're seeing is we're seeing gold prices moving higher. Gold prices have moved above the 50-day simple moving average on a 30-minute time frame. In terms of a resistance, in terms of levels for the price action for gold, so you just get ready for this particular trade. This is the first level of resistance that we are really looking at in terms of the data. If the price comes in, we can show the market. In terms of a support, we are going to focus right over here between 1900 or perhaps 1897. These are the price levels that we'll be very much looking at. Now, in terms of a Dow Jones, obviously a massive move to the upside. Clearly the market is in an upward zone. The market is very much in a bullish zone. So what we will be looking at in terms of the Dow Jones is the resistance. Let's see if the price can really break above the 50-day simple moving average on the daily time frame. That can really give us an indication that this market is going to continue its journey to the upside. So for that to happen, what we're going to do is we're going to draw a line right over here and then see how this line fits in with respect to our daily time frame. So I can just move a little bit up. So this is the area. 27,710 is a breakout area. So if the price comes over here, breaks above that, we'll have a clear confirmation that the market is moving higher. So that would be a buy trade. If not, what we are going to do under those circumstances is that we are going to initiate a short trade, adjust, and then when the market will come, and then we'll put a stop loss just on top of these particular candles, just right over here. Let me just draw that one over here as well, just for you guys to understand. So there you go. So that is, so with the Dow Jones, we're looking for a short trade. With the gold, we are also looking for a short trade if the price comes over here. But if the price breaks out of this one, then we will take a long trade. But in the short term, we're looking for a short trade. As for the S&P 500 index, clearly the price movement is very strong. We have recovered most of our losses that we've experienced last week, which is phenomenal in terms of this particular market. So that means that this particular line does not has any importance at all. Now that it is moving higher, the line that we are, the resistance level that we are really looking at is the top of the last week's high, because that is the level that we are very much focused on over here. This is where the resistance level could be, perhaps, and then that is going to run between 3,461 to 3,443. So again, this is a short. Once again, to review, this is our short for the Dow Jones, looking for the prices to come into these particular levels. For the gold, again, looking for the prices to come into here. But on the flip side, we can look at the buy for 1897. The news is about to come. We have less than a few minutes left, so let's just get ready with everything else, because I wanted to tell you guys that, you know, how active we are and why do you need to get this sort of a data straight onto your platform. So let me just quickly get everything ready for you guys so that you guys can see that why are we so emphasizing on following this one, because the moment the data will come, you will have the news straight onto your platform without any issue. So if you follow us, you will get the news. So here we go, guys. Less than a minute left. Let's see how the market will come. The data is going to come over here with respect to the ADP. We're going to post that data straight away, and we can really change this one into maybe 3 days so that we can 3-minute time frame. And I'm going to bring gold chart over here just to see that how the market will continue to perform, and not get rid of this one. Right, okay, so you can see the just waiting for the news to come out. It's only a few minutes to go, sorry, a few seconds to go, less than 30 seconds. We'll have the news, and then the moment the news will come out, I will send that news straight to you guys. There you go. The data is out. ADP research says added how many jobs? 365,000 jobs. Wow, that is phenomenal. 365,000 jobs. So once again, the number seems like it is coming very much on in line with the market expectation. That is why we are not seeing much of a movement in the market. Once again, we can go back and then we can see what the market expectations were as well. So again, you know, okay, 365. Wow, that is a number which is much lower than the market expectation. That is a very weak number. So let's see how the market has performed. Obviously, the gold prices has already started to move lower. In terms of the S&P 500 index, what we're seeing on the 30-minute time frame, again, a move lower to the downside, again, move lower for the Dow Jones as well. In terms of a trade, we really do not have much of a trade, but because more of the focus is primarily on US elections, as we discussed, you know, last night. We've been up all night. We still don't know who's going to become the president of the United States, and investors and traders are a bit more focused on that than anything else. But now we are seeing a little bit movement, very slow movement to the upside after a long time. After a very long time, we are seeing a little bit of a movement to the upside. So let's see if the price comes into this one. That is where your short trade could be, because the data was very weak. So this is not a good news at all. This is a very bad news in terms of this particular market. And what we are expecting is for the markets to move lower. Now, in terms of the overall for the US non-farm payroll, let's do a setup for how the market can perform coming on Friday. So what we're really looking at on a longer term perspective is, let me just go a little bit zoom out. So what we're looking at, you know, on a longer term perspective is our support zone, which is going to be right over here. So I'm just going to move this support zone right over here. So this is our support zone. And then because this is a support zone, so what we can do is we can change the color to green, so that when we look at the charts, we can clearly see that this is our support zone. Because if red is really your resistance, I like to keep that color as a resistance, and green, I wanted to keep it as my support. So now in terms of a resistance zone, on a longer term perspective, what we're really looking at is perhaps this area where the price is right over here, just above the 50-day simple moving average. So this is the area that we are very much focused on. So once again, this is our support area. We can slightly narrow it down to maybe perhaps over here. This is our support area. This is our resistance area. So keep that in mind with respect to that. Let me just see, because there are some people are asking, I believe, questions. So just going to make sure that I'm not missing any questions. Are there any questions, folks? If you have any questions, just please type them, because I can certainly answer them as we go along. Because right now I don't see any questions. Okay, that's fine. If you have any questions, just please feel free to ask them as we go along. So now, again, going back to the Dow Jones, what we're really looking at in terms of a Dow Jones is that we have this as our resistance area, our support area, and then this one as our resistance area. Now, clearly the price needs to break above this particular area, which is the area of there's a lot of resistance between 100-day and simple moving average, and 100 and 50-day simple moving averages. The moment the price breaks out of these zones to the upside, that could be an opportunity for you to go long. And if that happens, obviously this particular zone is going to become very much of a breakout zone. So the moment the price breaks out, you go long on it, and you can put your stop losses just below this 100-day simple moving average. That is what you can do. So the moment that you go up, you can put stop losses below your 100-day simple moving average. That is what you kind of wanted to look at. Now, similarly, what we're going to do is we're going to define the areas for our S&P 500 index as well. So let me bring up the S&P 500 index. So as I was saying to you, the S&P 500 index has already pretty much recovered its losses from its last week. And today is only Wednesday. So we're only halfway through and the market has recovered its losses. Now, on a longer term perspective, what we are really looking at in terms of a resistance for this is the area between 3,545, 3,585. So this is your resistance area, and then this is your support area. Again, on the daily time frame, we are targeting the all-time high. And then if you want to take a long trade, you can certainly take the long trade as of now. But what you can do is just make sure to put your stop losses, and that stop loss can really be just below this 100-day simple moving average on the daily time frame. Just make sure that you have your stop losses in place, because the moment the price falls below your 100-day simple moving average, then you are really talking about, more weakness, perhaps price moving back towards its 200-day simple moving average. So once again, to summarize, if you are looking for a long trade, you can go for a long trade right now, but make sure to have your stop losses just below this 100-day simple moving average, and then target the price right towards the upside, and then see if the price can really achieve its all-time high, the prices that it formed before this one. So this is the area, the 3,500. So again, that is quite an intriguing one. Now, as for the Nasdaq, this is very, very interesting. Again, for the Nasdaq index, the price has crossed above the 200, 150-day simple moving average on the daily time frame. This is quite an intriguing one. And in terms of a resistance, we are going to target the all-time high, which is right over here. In terms of a support, what we can do is, if you really wanted to wait for the price, then you may want to wait for the price to retrace towards its 100-day simple moving average. Equally speaking, if someone wants to take this trade right now, you can take this trade right now as well. But remember, you will be having quite a big loss on this one, because the stop loss needs to be below the 50-day simple moving average. So you are really, your stop loss is this big. So if your stop loss is this big, then you really wanted to target this area, this particular area right over here. This is the area that you really kind of wanted to target as your resistance area, as your target area, as your take profit area. Because right now the price is very, very far from its 50-day simple moving average. The best trade would have been the moment the price crossed above the 50-day moving average. This would have been perfect trade, and putting your stop losses just over here below this 100-day simple moving average. If you have done that, then that is great. But if you haven't done that, what you can do now is put your stop losses below the 50-day simple moving average and let the price continue its journey to the upside. Hope that makes sense. Does that make sense to you guys? Any questions so far? Okay, sure. I can do the euro dollar as well. No problem. Sorry to interrupt. Just a quick recap. What is the platform or app do you use for NFP? For NFP, you can, like I said to you, you can go to the Forex factory and then you can look from there. The data will be released, or you can use the Twitter. Like I said to you, if you follow Twitter, you'll get all the news straight to your platform. But the platform that you see right behind this over here, this is your Bloomberg platform. So is a quite expensive platform, so you may not want to be considering that, because that's about £2,000 a month just to use the platform, and it's for professional traders. What currency pairs are the best to trade NFP? Euro dollar for sure. It was said to me to go short on Nasdaq. Okay, I don't know who said to you that to go short on Nasdaq. Maybe this is not the best time to go short on a Nasdaq right now. Why do you use the 50 SMA rather than 20 SMA? Okay, so the reason that I use the 50 SMA because I use very big charts. I use the charts on a daily charts. So when we are talking about a daily chart, we will usually would use the 50-day simple moving average because these are the averages which are very much looked by the institutions. During my time at institutional banks like Bank of America and Bank of New York Mellon, the focus has always been among institutions between 50, 100, and 200-day simple moving averages. Hopefully that answers your question. Okay, can you say again when to play stop loss? Okay, so are you talking about the stop loss with respect to the NASDAQ, or are you talking about the stop loss with respect to the Dow Jones or S&P? So just explain that to me, and then I will explain it to you. Where should you park the stop loss? Okay, NASDAQ. Okay, again, I'm gonna go through this to show you guys the where to look at the stop loss. So you can go and you can enter now. This is not the best trade. Once again, I wanted to highlight that. And in terms of a stop loss, this is your 50-day simple moving average. So what you want to do is just place a stop loss below this price level. So just below the 50-day simple moving average, that's where you wanted to put a stop loss. Once again, this is not the best trade, but this is a momentum trade that you will be taking, and then you will need to really adjust your position because the stop loss is quite a big, because this is your entry. Your entry is going right over here. This is your stop loss. So there's quite a bit of a distance between stop loss and entry position, which is not an ideal situation. But because NASDAQ is gathering quite a lot of momentum, and if you do not want it to miss that trade, so you can reduce your position size. So if rather than taking two contracts, one contract, maybe you wanted to take a half a contract or 0.1 contract, 0.2 contract, just take smaller lots rather than bigger lots, because obviously the stop loss size, the portion is quite big. Hope that makes sense. Okay, so there was another question, a euro dollar. Sure. So let's have a look at the euro dollar before we call it a day. So let me bring out the euro dollar pair. So on the BTC, I'm going to bring out the euro dollar. So again, when we are looking at the euro dollar, let me just get rid of all the drawings because we don't really need it. When we look at the euro dollar pair, first of all, what we're going to look at is where the price is trading with respect to the moving averages. So the price is trading above the 200-day simple moving average, but the price is in battle with its 50 and 100-day simple moving average. So this is a very, very good opportunity right now. So this is what I mean. So you can go short as of now because the price is dropping below the 50-day simple moving average, and put your stop loss on top of this particular candle. So go short right now. This is where the price is, and then put your stop loss over here. However, if the position swings, if the price moves above the 100-day simple moving average, then what you want to do then completely opposite. Go long the moment the price goes above the 50-day simple moving average, so right over here, and put your stop loss under those circumstances just below the 100-day simple moving average. So the 100-day simple moving average is trading in around here. So what you want to do under those circumstances is okay, let me just actually draw the lines a little bit more straight. I'm gonna get rid of this one, and I'm gonna draw the lines from here. Okay, so what do you want to do under those circumstances? If you wanted to, right now the short is very, very good. But if you wanted to go long, if the price reverses its direction, this should be your stop loss. And then wait for the price to cross above the 50-day simple moving average. Let me just see what the news is coming in. Some big news is coming. S&P 500 December futures extend rally, rise 2%. Wonderful. We don't even know who the election, who the president is going to be, and the market is rising. Ain't that insane? This market is as crazy as it can be. There's so much, uncertainty with it, but the markets are rising. Anyways, folks, So what you got to do is, with respect to the euro dollar, you can go short right now. It is a pretty good trade, to be honest. And then target, in terms of your target, what you wanted to target is really in around this price level, the lows of this particular candle. Or let me actually see if there is a better level. Yeah, this is the level in terms of a support. And if you are going short, this should be your price level that you should be really looking at. Let me see US Treasury slow pace. What is this news? Slows pace of increase from 10 days. Okay, no, nothing much. All right, okay. So the market is just open. US market has just opened, so that's why there's a lot of news flow happening. Forget about that anyways, because we are more focused on the price and the price itself. So, all right, folks. So that's pretty much from my side. So let me see if there are any more questions. If they are not, then we will call it a day. All right. That's it pretty much, guys. Good luck, and I will see you guys next week, same place, same time. Thank you.